Good afternoon, everyone. So I was reading a stat the other day that 70% of foreign capital, 70% of investments into Indonesia have come from foreign capital. So it's clear that foreign capital plays a huge role in building the startup ecosystem here. And we heard a little bit about that in some of the panels this morning, saying that Japanese, Chinese investors have played a huge role in building and having come in as early investors in the startup landscape in Indonesia. So we've put together a distinguished panel today of foreign investors to talk a little bit about their experience and their perspectives on how they view the market, the challenges they face, and really how foreign capital and local capital can sort of work together to really build the ecosystem. So I'm gonna let the panel sort of introduce themselves first, and then we can dive right into the discussion.
Cool. So Ben Dunphy, I'm an investment director at Blue Sky. We're a multi-asset fund manager. We're headquartered in Australia. We have 4 offices there, an office in New York. We manage about $3.5 billion. And we've been investing up in Southeast Asia now for about 12 months. We're a later stage venture by trade. And what we're looking for, I guess, up here is some of those platform assets that I think everyone else is looking for, but that we feel are going to power the digital commerce kind of ecosystem as it grows over time.
Hi, my name is Ryosuke from SBI. We sometimes get confused, but we're not SoftBank. We spun out 18 years ago, and we're totally independent now. SBI, what we do is twofold. One is VC investments. Have about $2 billion committed capital globally. And the other is online financial services, online banks, online securities, so fintech is sort of where to merge. We've been in Indonesia mainly since 2011. A strategic investment along with BNI Bank Negara Indonesia. We're in BNI Securities 25%. And then also a financial investment in Tokopedia and a few others since then.
Hi, I'm Soonhee Kim from OPT Southeast Asia, which is an OPT group listed in Tokyo Stock Exchange. OPT Group is the core business of digital marketing company. Been doing over the 20 years over the Asia, including, of course, Japan, Korea, China, of course, Southeast Asia. OPTC is corporate ventures and also incubation arms of OPT Group. But we started the investment activity back in 2011. So far, we have more than 10 portfolio over the regions. One of it in Indonesia is in the trading.
Cool. So we've heard a lot of talk today about how massive the Indonesian market is, and it's growing super fast. I think Mark Britt from iFlix said this morning that he can't really trust any data about the Indonesian market except it's really, really big and it has a ton of smartphones. So it'll be interesting to hear what's the one thing each of you guys love about the Indonesian market from a foreign perspective?
I mean, obviously the size of the market is attractive. I think when we look at Indonesia, there are 2 things that get us really excited. One, I don't think we're that far away from the true growth potential of the country. You look at the sort of GDP or the earnings per capita, it's sort of $3,500 per consumer or employed consumer. And that's, not that far off where China was when it started to see the rapid e-commerce growth. I think challenges, though, is ultimately that the market still has some key inhibitors to actually realizing that potential, regardless of whether I can spend effectively as a consumer. How do I pay online? How do I actually generate a credit score when there's no centralized bureau? How do I receive parcels if I live in an outlying island? There's still real challenges that, I think are inhibitors to the potential as well.
I think I need to echo that, actually. So yes, what I love about the market is, what we love about the market is the size and sort of where it is. In mid-run, it's bound to grow, and sort of what we saw in Japan and perhaps China as well, sort of a digital platform and a fintech enabler or another kind of enabler, making it capable to grow horizontally. I mean, what worked in other regions, what we've gone through in Japan, we believe we can work here and has the right sort of macroeconomic indicators. It's there. But then how long is it going to take, and a bit of political risk is something that we've faced even in the 6 years we've been here. So I actually totally echo Ben.
What I like about Indonesia markets, well, definitely, from back in 2011, I can definitely see a dynamic changing of the ecosystem. It's really dynamic. Back in there, that's when the mainstream, the industry, mainstreams started in the industry like a Tokopedia, then Bukalapak e-commerce, and payments, then logistics, just completing the seed funding, preparing the Series A or B area. But back then, there's no case study, no KPI traction. We don't know anything, but it's a hype of the expectation. There are a lot of, oversubscriptions, and I see a lot of too aggressive forecast. And, it was really chaos. But we learned, and within this 5 years and 6 years, all those kind of gold rush, frontier investment heat was definitely settled down. But it's in a good way. It gets much healthier for a lot of barriers to corporate investors or any foreign investors coming into. Yeah, that's those dynamic changing only just 5 years. It's amazing.
I think it's all very interesting. Both of you brought up a few really good points. So obviously, like the opportunity is huge, but there are obviously challenges with the market as well. And although the challenges for all investors, I think foreign investors particularly obviously will have challenges of their own, right? The market's very different to what you're used to. There's getting to know the local scene, the culture, the context is all very different. So what do you think are the biggest challenges, and how do you navigate around those challenges as foreign investors in Indonesia?
I think this is applicable for Southeast Asia more generally. The thing that we really think a lot about is just the lack of liquidity and true M&A market that exists. What we've seen in Australia over the last 10 years and what you see in North America is the majority of M&A actually kind of ends up being in the sort of $50 to $100 million range. And that then informs how you think about investment. I mean, we're coming from a financial investment perspective with less patient capital than a strategic might be. And so for us, something that we've been putting a lot of thought to is, are acquirers actually going to pay the multiples that people are coming in at for these companies right now? Like, there's really no certainty as to what that exit market looks like, and you don't really have the same sort of public markets opportunity that you might have in other regions. Like Australia has a bona fide opportunity, obviously the US and Europe does as well. So one thing that we've thought a lot about is how to still be able to participate in this region, in this market, trying to sort of stick through the cycle multiples and not get caught up in the bull run when you don't actually know where we're going to see an M&A market sit in the next 3 to 5 years.
I think Japan and Indonesia has had a very sort of long and good relationship. There's been a lot of trade houses and Japanese company who came here a long time ago have hundreds of expats living in Jakarta. But I think that was built more of in a partnership. And from our strategic perspective, we actually do the same. We succeeded in Japan because in the late 90s we brought in business model from the West, from US, but managed it in a Japanese way, and that's how we succeeded. Likewise, we can bring in sort of know-hows and technology, but we can't really manage the operation here. So from a strategic angle, when we enter, we look for partners. But then when it comes to sort of VC financial investments, that's more of, again, betting on the founder. And obviously there's sort of a generation change between sort of the more established people that we partner up on the strategic side versus VC. So it's basically partnership.
Yeah, I think both of it is covering basically what I want to say. So, well, definitely as a corporate ventures, looking for a synergy, but still, pursuing the practical synergy is really challenging. It's not really, be honest, not practical. So most of the time, I think following corporate ventures, looking into the investments by learning the market and also financial return. But when it comes to financial return, again, there is no clear exit route. So that's another challenge. So a lot of challenges.
Although I think a lot of Chinese strategics are putting a lot of money in the market, obviously, and I think like more than 90% of the investments this year have come from Chinese strategics. So I think they seem to really believe in the market, and I think they obviously want to get that local perspective and are coming in and spending a lot of time in the market. What are your thoughts on the influx of Chinese capital, and how do you, as non-Chinese investors, how do you work around it? Do you seek to partner with them? Maybe identify opportunities, work alongside them. What do you think the opportunities are with all the Chinese capital coming in?
Can I start? Well, definitely. Again, the markets gets healthier. This is the time for us, the corporate ventures, to think about the practical strategies. They identify ourselves compared to Chinese giants, capital and resource. It's a lot of challenges to identify ourselves. But specifically us, we've been operating digital marketing in the regions for a long time, and of course, Southeast Asia and any Asia. Definitely, I mean, everyone needs marketing, right? So definitely we can support for that. Then Japan is also another clear targeted market for when it comes to the Asian strategy. So definitely we can support in on Japan market and also Korean market. I mean, Chinese markets itself is just tough. So there is, I think, another clear strategy. So except for China, Korea, Japan, and other Asia, we can definitely support.
I think there's obviously pros and cons of huge capital coming in. Pro for us is that sort of how we see the market, sort of what we've been doing, investing in digital platforms and also investing in enablers, namely fintech in our case a lot. That kind of play it seems that the Chinese money likes as well, which is a very huge push for us. On the other hand, especially on relatively early stage companies, I sometimes feel that there's too much money pumped into companies that may not be ready to receive that much money, and that would be a con in our case, because we basically lose investment opportunities.
Yeah, I mean, just very quickly, we had a government-led scheme in Australia in the early 2000s that pumped a lot of capital into businesses that ultimately weren't that ready. And what ended up happening was you never saw the value accretion. It kind of destroyed the venture market for about a decade in Australia. And so I think the only kind of cautionary tale from that is just that the fundamentals of the business still need to stack up, and timing, no matter how patient of capital you are, still needs to eventuate to sort of something that's actually stacks up to the amount of money that's been pumped into the ecosystem, or else the last thing you want is for everything to fail and then no one wins, right? So that's kind of the only thought that we have on that.
Would you say that sort of drives your investment strategy a little bit? So you come in a little bit at the latest stage. So once you've got proven platforms, and I think that's what a lot of the Chinese investors are doing as well. They're coming to proven platforms that are very sort of proven, product market fit. You sort of like moved on to the next stage of growth, really. And I guess that's where you guys come in.
Yeah, I mean, but putting $200 million to work is very different to putting 20. And
definitely,
and a lot of founders will have a natural limit, and that can then make transitions very ugly if there's already been a lot of capital put to work. So, I think it'll just be an interesting couple of years. Hopefully, it all pans out as everyone hopes.
Looks like we're running out of time, so maybe just to round up, maybe let's just get your thoughts and maybe a final message you want to leave to the audience on how you think foreign capital and local capital can sort of work together to really build the ecosystem.
I think capital and liquidity is always good. You really need an ecosystem. This part of the world, the ecosystem had been sort of tilted towards earlier stage. Now with larger capital coming in, I believe it is making the ecosystem more healthier. So I'm happy to see a lot of capital and liquidity coming in.
Yeah, the same things, of course, devoted to some assets in the regions, but more so, I personally feel really comfortable to go invest in the local capitals, but I think the beneficials to help us as a foreign corporate ventures is also the simply leads to the liquidity, higher liquidity
and exits.
Opportunity. Yeah, exactly. So since most of the exits in Southeast Asia still the MA, definitely the routes to the foreign buyer is inevitable. So definitely we can bring those benefits into the region.
I think, just for mine, despite the mega rounds that are going on at the moment, it's still so critical for the early stage Indonesian venture funds to be operating and deploying capital. So like the Alpha JWCs and the Convergences and the East Ventures, like without that, you're not going to have the next wave of billion-dollar businesses, right? So it's always important to look at quantity of deals as opposed to just how much money is flowing in. And it's great that there's actually a really lively ecosystem that's kind of still at the early stage, despite the billion-dollar unicorns as well.
Great. All right. Thanks a lot for your time. I think we're done.
Thanks so much.